Very much. The next session is on Islamic finance for trade and business. We just need a moment or two while the stage is set for our next panel. And there are four essential parts to this next panel on Islamic finance for trade and businesses. That's meeting short-term and long-term financing needs, innovative solutions for corporate and SMEs, infrastructure and project financing, and of course, innovations in redefining Islamic banking in countries' trade. May I please request the moderator for the session, Mr. Saeed Tariq Hassan from Meezan Bank Limited, to take his position on stage. For those of you who are worried about namaz, this session was originally supposed to be 60 minutes, but Tariq Saab, with his capable moderation skills, has promised to try and squeeze it into half an hour so that we can get as much interactivity and content dispersal as possible and still be able to make the namaz and lunch break as it should be. The session chair for this session is Mr. Ebrahim Sidat, who is the country managing partner at Ernst & Young, Ford, Rhodes, Sidat, Hyder. And a big round of applause. The panelists for this session include Mr. Ijaz Farooq, who is the head of Islamic banking at Bank Alfalah Limited. Mr. Muhammad Jehanzeb Saeed, who's the head of business development at HBL-Islamic banking. Oh, come on, he needs a little bit more applause than that. And Mr. Abdullah Ghaffar, who's the Senior Vice President, Baraka Bank, Pakistan Limited. Tariq Saab, as the moderator, the stage is over to you. As requested, you've promised to try and squeeze the time a little bit, but all right, once again, let me announce the panelists. It's Mr. Ijaz Farooq, who's head of Islamic banking at Bank Alfalah. You're already here. Mr. Muhammad Jehanzeb Saeed, who's head of business development, HBL-Islamic banking. Abdullah Ghaffar, who's the senior vice president, Baraka Bank. Ebrahim Qasim, who's the chief executive officer at Premier Agencies. Ibrahim Saab. Mr. Zahid Halim, who's the executive director at Muhammad Shafi Tanneries. And Mr. Fouad Farrukh, who's the head of Islamic banking at Faysal Bank Limited. If the panelists can quickly make their way up on stage. Tariq Saab, it's over to you.
Thank you. Assalamu alaikum, ladies and gentlemen. Due to shortage of time, I think we have to cut down our session to half an hour. I'll start off with Mr. Ebrahim Sidat. Ebrahim Sidat doesn't need any introduction in the field of Islamic finance. So I will start off with a very simple question. On your thoughts on the currently available products for the financing of businesses, trade and business in Pakistan. What are your thoughts on that, and are you satisfied with the general the pace of their development in Pakistan?
Thank you, Tariq. Bismillah ar-Rahman ar-Rahim. As we have been terribly constrained by the shortage of time, I'll be very brief. Up to now, in terms of the products available for trade and business, I think all of us are pretty aware, and people who are practitioners of the Islamic banking industry, they know fully well that Baraka has been the major product which has been deployed by Islamic banks to finance trade and business. I think it has done pretty well in terms of, I think, the total financing volume, I won't quote a number, but I think it's a predominant amount which is done through Muraba. So what we need to do is, yes, Muraba is a very important product. It has filled in the need for trade and business in a very appreciable way. All we need to do is try to refine the processes and things connected with that so that the purity of the system, the purity of the product is not impaired in any material way.
Right. Muraba definitely was the first product for the short-term financing in Pakistan, but with that we have moved on, we have introduced certain more products. Ijaz, what do you feel, are Islamic banks totally geared up to cater the needs of the industry in terms of the short-term needs and for financing?
I think the products, as far as the trade finance business is concerned, the only Muraba is possibly catering all the requirements of the industry. If you take import finance, there are various products available to provide post-import finance facilities to the customers. Like, I think we do not have any problem with regard to the import finance business. However, with regard to export business, we have having problem with the negotiation of USENS export LCs. Until this point in time, we are unable to cater this business, and we are losing on that. Another thing there is another aspect which is hindering export trade finance business in Islamic banking, that is excessive documentation. I think this needs to be reviewed on a pan-Islamic banking basis, and if we could reduce the number of documents, this will make ease the process and make it more customer friendly. The third product, which is where we are shy about, is the issuance of the bank guarantees. Because in case of bank guarantees, we are not entitled to charge anything from the customer in case the guarantees are called and we are asked to pay funds for that. Whereas in conventional banks, this facility is available. In view of this reason, we generally Islamic banks are shy to issue bank guarantees.
Thank you. Ijaz just mentioned documentation and a couple of other things that probably hinder the growth of Islamic finance. Fouad, I would like to ask you, what do you feel? What are the major challenges that you, as a banker, Islamic banker, face while marketing corporate clients?
Well, you have to go back into basic history. If you see, conventional banking is pretty much focused on select few clients. And practically, I think 80% of the funds deployed from conventional industry go for corporate banking, historically. So having said so, most of the corporate customers who actually are, when they are approached by Islamic banks, are looking basically for a cheaper financing rather than just Islamic financing. So Islamic banking, in a nutshell, has a mindset behind it, and there are people who are willing, who are interested in Islamic finance, are much easier target market than the ones we just approached, because yes, we want to be there too as other banks. Therefore, in my opinion, we need to focus in different segments altogether from just corporate banking and a Me Too strategy with the conventional banks. It is difficult, the processes are different, documentation are different, they're not used to it. They have abundance of facilities available from all banks, so the only attraction is maybe a 50 basis cut in terms of profit rate, if, let's say if it's a Muraba or any other form of transaction.
Mm-hmm. Correct. So probably the easier way of marketing those clients is to give them a price break. But even then, Islamic Bank is growing with a reasonable pace. I'm sure there would be customers who are willing to work with Islamic Bank even without price break. So, Mr. Jehanzeb, brief us on, your opinion, the growth which Islamic banks have faced. So, what were the main areas with Islamic banks have primarily grown in terms of their asset booking? And please comment on that.
Okay, first of all, thank you very much for inviting me on this conference. I would slightly disagree with Fouad's point regarding corporate banking customer and being price the only incentive for a corporate to move to Islamic banking. Yes, part of it is true, but nowadays there is also a large segment on the corporate and the SME side, which we call the middle market, which are gradually moving towards Islamic banking because A, there is awareness in the market, and B, they are also feeling the benefit of moving to Islamic finance. As far as the growth of the financing side of Islamic banking is concerned, currently the total portfolio of Islamic banks, including Islamic divisions, is around 200 billion rupees. And like Sidat Sahab said, major portion is Murabaha, but the thing which is heartening to note that now banks are also moving into diminishing Musharaka. But one point which I feel needs to be addressed, that most of the focus of Islamic banks has been on working capital finance. Yes, it's important to provide a corporate with the working capital facilities, but at the same time, we need to go into long-term projects as well. Not just this, but as an industry, like Sheikh Taki said in the morning and Salim Saab in his afternoon session as well, that Islamic banks are currently trying to mimic their conventional counterparts. I understand they have profitability pressures as well. But until and unless you don't give credit in the market and you just focus on government-backed ijara sukuks which are not creating fresh assets, that is going to lead what we call in economics the crowding out effect. You keep on giving it to the government, which invest to finance their capital deficit or current account deficit, and the money does not goes into the real sector, because of which there is no job creation, and in the long run the economy suffers. Regarding on the sector-wise distribution where Islamic banks are focusing, like main focus is textiles, they also have exposure on individual corporates and cement sector. But my point which I would like to put across in this session, that we need to move out of the mindset of just mimicking the conventional counterparts, because the whole objective of Islamic finance is to give some benefit to the society, and that can only be done if we actively have the same focus which we have on deposit mobilization on the corporate and the lending side as well. Thank you.
Thank you, Jehanzeb. Abdullah, taking from Jehanzeb's side, can you briefly touch on, the future? What should be the future asset growth side of the Islamic banking? Where should Islamic banks primarily be focusing?
See, there are a number of opportunities in the market, and as somebody said also before this session, there's a huge unbanked market space available to the Islamic banks, and that actually contains the agriculture side, the food processing, the agriculture warehousing. Then if you come to the urban market, there's a huge potential in housing finance, which is connected to 60 other industrial sectors. But what I feel, in my opinion, is we need to come up with some new products, some innovation in the way we have been banking before, and need to tap some other between the line sectors, such as supply chain financing. And the need of the hour is that the long demand of the business community is the running Musharaka type product, which is a substitute to the running finance, which most of the business community is accustomed to. They feel it very comfortable to deal in running finance product. Though we need to have some ground work to be done, which is left to be done, such as a third-party rating agency to actually vouch for that running finance Musharaka products outcome, or we have a third-party audit like that. And once we move with some particular transaction-based Musharaka transactions in this line of product, we can then develop a very good market for running Musharaka. As far as some other already approved products are there, we might actually look forward and expect the State Bank to refine and launch that LTFF product, which is only available to the conventional banks. And that product then too can contribute toward the development, overall development of the Islamic banking sector. And in the same line, the IERS product, I think this also needs some refinement in the pool criteria. Well, most of the private limited companies, they are actually not geared towards maintaining the required ROEs and the profitability criteria, and then at the end of the day, they are left out of the ambit of the Islamic banking sector. So this is what my suggestion is.
Correct. Sidat, taking from Abdullah Ghaffar, his idea of this learning musharaka, there's a strong demand from the industry that, the Islamic bank doesn't have a product that mimics running finance. Do you feel this is a correct demand, or should Islamic banks be having a product mimicking running finance?
Well, I personally think that, yes, there is an imminent need to explore the possibilities of making musharaka a very, very potent instrument of Islamic banking. But in doing so, let us not lose sight of the fact, what are the environmental and our ground realities in this particular respect. You see, we are a nation which is generally averse to sharing, either with our own people, or with our partners, or with the government in the form of taxes and revenue, and so on and so forth. We don't like sharing so much. And it's indeed an irony to say that, because if you look at a report recently issued, Pakistan ranks, contrary to many other things in our national life, Pakistan ranks very high on the list of philanthropy. So we do have a large amount of money where we believe that if we spend, there is a very sound objective, corporate social responsibility objectives are behind that, and we do not shirk our responsibility in that context. But unfortunately, that kind of money is not something which is documented, which is visible, and which one can say, okay, this is flowing out of the mainstream of the economy. Because we have a huge parallel economy. There have been various estimates of what kind of parallel economy do we have, what is the size, what is the volume. Different studies have been carried out by economists and other experts. I would not go into that, saying which is right and which is not. So for musharaka to be there, because I tend to agree with my friend Irfan and Saeed that we need to maintain the viability of the system as well. It's all very well to say, I mean, I'll personally admit at one point of time, at the very inception of this whole Islamic banking era in the 80s, I for one always profoundly believed that musharaka is the route through which we should go. But as a practitioner for the last over 4 decades, I can say that it would be very, very hazardous and perilous if we go into musharaka without doing necessary homework and without providing a good safety net. Because you are, after all, using depositors' money. And therefore, you owe it to it. And if, God forbid, in your ambition or in your exuberance to demonstrate that, yes, we are fit enough to go for musharaka, if it proves to be detrimental, then there's a huge detrimental, reputational risk to the banking industry and Islamic banking as a whole. So musharaka is certainly one of the best forms of and vehicles of Islamic banking and financing. But in order to do that, we as Islamic bankers must support the cause of documentation of economy. Unfortunately, sometimes I personally believe that looking at the ground realities, and particularly some of the business and commerce sectors where documentation is close to nil, we espouse all sorts of causes to say that, well, without this also this is possible and we should do that. So I would tend to agree with my friend here that musharaka is really a very important means of promoting Islamic banking. When we talk of Islamic banking, it is essentially musharaka. It is essentially and fundamentally musharaka. Murabaha, yes, it's a Sharia compliant product, no doubt about it. We need to be careful in doing that, lest the line between halal and haram is very thin. And we tread the line and we, God forbid, tend to make our transaction tainted. So, in short, I would say that yes, one should explore the possibility of promoting musharaka. And in this context, I would rather take the opportunity of this August gathering here to request my friends in the industry, Islamic banking industry, which I've repeated before as well, that please try to have a formal forum of Islamic bankers or Islamic banking institutions. You are all part of the Pakistan Bankers Association, fine, no problem with that. But your problems sometimes are at cross purposes with the conventional bankers. So you need to concentrate on the very special and unique problems which your industry faces, so that you can make out a very common agenda, a common concerted effort before the regulators and all those who matter in policy making and law making, and so that your interest is served well with a focused attention on Islamic banking. Unfortunately, I don't know whether it has been a low priority with my friends in the banking industry or some other reason which is deterring them to do that. But it is the need of the hour that you congregate on one platform as Islamic bankers to espouse your cause, to make further stride forward, and I'm sure it will yield you good results. Thank you.
Fouad, with your experience, do you feel that Islamic banks can provide the project financing needs of the industry? Are there adequate products available for the industry to come to Islamic banks for their long-term needs?
Okay, you're referring to the long-term requirements, basically the physical assets. Well, Islamic banking being an asset-based or asset-backed financing model provides ample opportunities for expansion of physical assets through its long-term modes, which are diminishing musharaka. It's adequately practiced in Pakistan and is doing very well. In fact, I think the growth in terms of financing in Islamic industry is coming from these products. It's more easy when you ask the first question about the corporate banking, especially the large corporates, they find this mode and this transaction much easier because the documentation is not ongoing like a typical working capital facility. As a specialist in Islamic banking, yes, I totally agree that the middle market is where the growth is, where the value creation is, and for that, as far as my institution is concerned, we have put up a full set of Islamic banking team to cater to the commercial segment for short tenor and long tenor requirements. And for the large corporates, yes, I think Islamic banking is adequately catering to their requirements.
All right, thank you. Mr. Jehanzeb, Islamic financing is about obviously assuming risk. Islamic banks, while providing financing to the industry, usually acquire more risk than the conventional counterparts. Can you just briefly, for the benefit audience, can you briefly identify a couple of additional risks that Islamic banks, while providing financing to corporates, they assume?
Okay. I think this risk has already been exhaustively discussed in the first two sessions, and that is the biggest risk, and which is that of non-Sharia compliance. When you talk about structuring an Islamic banking transaction, you do your homework with regarding to your making of a credit proposal, analysis of your financial statement, ensuring that there is adequate collateral available. But if your transaction, or if any step of your transaction is not as per the approved process flow or your product program, then the whole income goes into charity. In credit risk, if there is a problem, if there is a default, you always have a recourse available in form of a security, it could be a margin or whatever. But this risk cannot be mitigated as per se. Now, what to do about it? How to go about it? If there is a risk of non-Sharia compliance, should we stop booking Islamic banking transactions? No. The solution is a three-pronged strategy. First and the foremost is that your front-end sales staff, which includes your relationship manager on the corporate banking side, or your BDOs or RBOs on the consumer or retail side, they have to be trained. And training should not be ke ek martaba nivaaf karwa diya ya ek martaba ek session kara diya and you are through with it. Training is an ongoing exercise, and it does not mean that it should be classroom training. It should be off and on sessions with your training department, A. B, it is equally important that you educate your back office. You should, your CAD, your operations, they should be aligned and they should be capable enough to handle Islamic transaction. Because if that area is left alone, they can be nightmares in which you cannot manage. Because herein, if this product is non-Sharia compliant, or if there's a deviation from the main process flow, you don't have a recourse available. And the third thing which needs to be addressed, which some banks are trying because of the size, is you need to educate the customer. You need to say, yes, you want to do an Islamic transaction, you are most welcome. But there's a process which has to be followed. Although my personal experience is that being Islamic bankers, we need to now try to harmonize, try to make the documentation simpler, because when you talk about larger corporates, they need the funds, they need the transaction to be executed smoothly. They don't want ke itni sari documents sign off on. So the biggest risk which Islamic bank additionally faces when doing a structured transaction or a corporate or a commercial or a middle market transaction is the adherence to a process flow, because if you don't do it, there will be, the income will go into charity. Thank you.
Thank you. Ijaz, assuming risks, basically, assuming risk for transactions, we have, Sidat Saab and Abdullah Ghaffar have touched upon the musharaka thing. Do you feel that, Islamic banks not going for the higher risk products like musharaka, do you feel the size of the bank is making a role here? Because obviously all Islamic banks, whether Windows or conventional, are relatively smaller as compared to the bigger conventional banks. So do you feel that size in a way hindrance to taking a riskier transaction?
Well, I don't think that the size size of the institution affects the taking a risk assets. There are two risks associated with financing facilities. One, as rightly pointed by my colleague here, is the Sharia risk, Sharia non-compliant risk, and other is the usual risks which we encounter even in conventional banking. Well, for us, the more important thing is that is the Sharia non-compliance, because in that situation we lose out on the income of the transaction. This, as rightly discussed, we must train the staff, we must train the back office staff, and we must at the same time educate the client as well. We must provide him with the process flows along with the sanction advices, and also obtain his acceptability. And where there is a problem, if the process with the process flow, we should arrange amendments and approvals from the Sharia. The biggest risk which we experience is one is the Sharia compliance, non-Sharia compliance, and the other is the normal credit risk, losing non-performing loans. That these are in conventional banking and these are in Islamic both. But with us, number one comes the Sharia compliance.
Okay, thank you. Mr. Abdullah, one last question. Islamic banks have got the product, they are willing to offer nice prices, but there are still some customers who don't want to work with Islamic banks. In your experience, what do you feel the main reasons that keep the customers away from Islamic banks?
See, there may be many reasons actually, and they vary from customer to customer. Mm-hmm. There are few customers who are actually hesitant in complying on their part with the expectations that the Islamic bank has from them in terms of handling of a transaction, and some have genuine reasons, but those genuine reasons actually vary from customers to customer, and they are the background behind those reasons are sometimes non-uniformity of the scholarly opinions. They give different opinions from different scholars, so they get confused and they actually feel comfortable in what they are doing right now. The usual statement that we get from the business committee is the use of KIBOR by the Islamic banks as a benchmark, which I believe is about to be concluded, and the banks will definitely get an IBOR instead of a KIBOR. It will be addressed partially to an extent. The other areas are actually what made the business community confused is actually the blurring features of the Islamic and conventional banking. They feel it difficult to actually correctly identify the features that make Islamic banks different from conventional banks. Over the passage of time, these features have become blurred, and I think as stakeholders, we need to work on those features to make them more distinct from a customer's point of view, because customers also want to feel very comfortable and very, very sort of at ease that what they are doing now is actually what they wanted. Mm-hmm. So there is a little work which needs to be done, and some work needs to be done on those customers who actually very passionately came in and worked with Islamic banks, but for some reason they actually returned to their own past practices of banking. We need to work on those customers at a very, very priority level, because those customers then definitely they have a word of mouth which they share between their own community and their own business circles. And if that mindset is not addressed, this will not be beneficial for the banks in the long run. So concluding, the point that I make is that we need to move away from Kaibo as soon as possible, and we need to educate the market, as well as we need to work on some features of Islamic banking, just for the sake of making it very, very clear and to remove all the confusion that the business community has. And even the masses, there are people in the retail side which want to place deposits, and they are just not get convinced from moving away from the conventional bank for one reason or another.
So can we say that the one of the main probably hindrance is the lack of awareness? Basically, the market need to be taught, to be educated about the availability of products, the difference, the use of Kaiba, or why it is correct. We need to educate them.
Yes, you're right. Awareness, and awareness about some uniformity in the products. Okay. There is also some confusion because the variants are very different between different banks and different.
Right. Thank you, Abdullah. So I would like to conclude, sum it up with one last comment of mine. Islamic banking has so far been promoted and advocated by the banking community and the finance professionals. Do you feel that the customers, the industry gurus now, they need to play a role in this, in this, our?
Yes, I think you have raised a very important point. There is, without any doubt, an imminent need to have more interaction with representative bodies of trade and commerce. Right now it appears there are islands of Islamic banking and Islamic finance operating in their own way, of course competing with each other, and the giant conventional banks as well. In a way it is good, because in the first session somebody said the conventional banks ought not to be there for Islamic banks to prosper. When I made a presentation before the Supreme Court of Pakistan in the Riba case, at the back of my mind, faintly, I also did have this particular point when I was asked this question, that how soon can we switch over to Islamic banking? And my reply to the Honorable Bench was, perhaps we can do it within a period of 6 months to a year. When I see in retrospect, I have become wiser. And I do see that we really need a good enough time. When conventional banking, Dr. Ijaz Sahab was there in State Bank of Pakistan. I had some discussions with him. And I think he was very, very supportive of the fact that while Islamic banking industry needs all the regulatory and the central bank support and all the rest, conventional banks should work alongside that particular system. And I think this in itself is very important for the growth and survival of the Islamic bank. Because then they'll be on their toes. Then they'll be facing the competition, not only within themselves per se, between Islamic banking, but also with the commercial banking giants. So there is a need for creating an awareness. In the context of awareness, I've also felt this. I think once this point was brought before us in the Sharia board of the State Bank of Pakistan, on which I have the honor to serve, that sometimes there's a big gulf between what the top layer of the Islamic banking organization has commitment for Islamic banking and the people down below in the branches. And somebody narrated, somebody participating in that meeting narrated that, well, somebody said, I went to a branch of some Islamic bank and I said, what exactly it is, please explain me, how is it different than the conventional bank? According to what was narrated to us and relayed to us, right or wrong, I can't sit on judgment. उसने कहा जी कि आप पैसे रख दें, कोई ज़्यादा फर्क नहीं है, आपको उतने पैसे मिल जाएंगे जितने पहले आपको बैंक से मिलते थे. Now what does this demonstrate? This demonstrates two things. A, certainly lack of the desired level of training and awareness in the bank's staff itself, who are on a day-to-day basis dealing with their customers. The relationship managers are referred to, the front desk and the back office and all that. And secondly, the commitment of the people working in the Islamic banking industry. I've come across, as a practitioner, I've come across situations where there are certain gray areas between Sharia compliant, non-Sharia compliant, and at times one feels that somebody is bending backward. I tell our honorable Sharia scholars as well that at one time you used to say no to everything. Ye nahi ho sakta, ye najaiz hai hamaara. Now when it comes to validating the thing, perhaps there is a need for being more cautious on your part so that this great responsibility which lies on your shoulders is not impaired and injured in any particular manner. Well, the time is running out and I would not like to detain you from prayers and lunch and the rest of the sessions to follow. I would, in the conclusion, say one very important thing. There's a built-in mechanism in the Islamic banking as such, in Islamic finance as such, for risk mitigation. Because in the conventional banks, where you do client evaluation and credit worthiness and all that, you've got more than one means to realize your money by enforcing your security and whatnot, although in practice that also poses a lot of difficulty, despite banking tribunals being there, despite the fact that the time frame has been reduced under the ordinance of 1984 and so on and so forth. Islamic banking per necessity, as an operational culture, must see to it that whatever money they are giving to any customer, there is a very thorough evaluation of the customer. This in itself is a risk mitigation mechanism. Because if you are in doubt about a particular customer, he is no good a client for you, because then you are stuck. Even if it is murabba, so what? On murabba, you are not able to take more than what you have agreed. Whereas in conventional banking, the meter goes on. So the very built-in mechanism for risk mitigation in Islamic banking is that the upfront evaluation of the client and the project and the business and the people behind it, they need to be evaluated full hog in a very, very professional manner. This in itself will ensure the success of the system going forward. This is number one. Number two, as my friend used the term and I'm borrowing it, stop mimicking conventional. You have your own features, you have your own uniqueness, and sell it on its own merits, on its own commercial merits. Jannat ke waade par bhi nahi, ajar ke waade par bhi nahi, wo to hai hi hai behral. But on commercial merits of the whole thing. Tell your customers it makes business sense for you to do it in this particular manner. The day you do that, inshallah, you will see that the pace of progression will be tremendous. And you will be nearer your goal of achieving your market share in a very, very appreciable manner. So in the end, I would like to thank the organizers for giving me the privilege of sharing this session, and to my colleagues here on the panel for responding very ably to the various questions, and certainly to you, moderator.
Thank you, sir. Thank you very much.
Thank you very much.
Thank you very much for a very, very enlightening session. I do realize that we were unable to incorporate any audience questions, but we do have namaz and lunch and a networking session to do that. So before we take off...
Excuse me, I would like something, one question I would like to put them.
Very, very briefly, if you can.
Very briefly. It's to Sidat sir. It's something which when they were referring to, my name is Nasir Wahid, and they're referring to is that they have got Sharia boards on there, and they have got State Bank of Pakistan. So does the Islamic banks have got, whom do they follow? One question.
I'm sorry, I'm not clear.
They have these Sharia advisory boards with each Islamic bank, which is quite different from each other. And the State Bank is the regulator. So the Islamic banks, it appears, have two regulators within themselves, that one, they have to comply with the State Bank regulators as well as with the Sharia one. Number one, is that so? And the other, sir, दूसरी इसी चीज़ के साथ है कि in case there's income which is not Sharia compliant and it's been gone into unintended charity, does the tax is also not paid on that, or is allowed as an expense?
Let me respond to the first one very, very briefly. I don't think there is any multiplicity or duplication of regulatory process. Your own Sharia advisor within the bank is part of the management team. He is like your finance director, your marketing, your, etc., etc. Except that because of his unique expertise in Sharia, he is performing that role of the Sheikh. So he is the bank's management team member. Whereas State Bank of Pakistan is the apex regulator. And like any other organization or company, even non-banking, you may have your own, let's say, compliance director for a variety of compliance things. But then, yes, there is a regulator, SECP, sitting in Islamabad. So there is no duplication. I mean, just to make it very short. The second question was with regard to
tax.
Tax. Well, let me tell you that the fundamentals of taxation has taught us that taxman is not concerned with the legality or illegality of income. So even if you show any income from smuggling, the taxman will tax you. If you show any income from bhatta, the taxman will tax you, provided he knows about it. So if it is charity, my own hunch is, I don't know whether it has yet been tested or not. I'll check up from my tax colleagues in my firm as to what is their practical experience in this. But to my knowledge, it will be taxed because it is part of income. The only difference is, in order to be Sharia compliant, you are not required to take it as the owner's or shareholder's income. And you set it aside for a charitable cause. That's about all. But its inherent nature as income is not denied.
Thank you very much. Can we please give our panel a very, very big round of applause? Ebrahim Sidat, I would like your assistance in giving away the plaques to our honorable panelists. So Ebrahim Sidat is the country managing partner at Ernst & Young, Ford Road, Sidat, Hyder. May I please request our fine and very, very talented moderator, Syed Tariq Hassan, who's the EVP and Corporate Head South at Meezan Bank Limited, to accept a token of our appreciation.